Let's talk about some of the hot topics, whether it be AI or immigration and how that's impacting our business. Why don't you dive into those issues and share what you're seeing and hearing, how you think it impacts our market?
Yeah, I'm going to start first on immigration. It's a topic that many clients are asking about, and there are many headlines in the marketplace that are stating the negative impacts to potential demand because immigration in our country has declined. Real estate, at its core, it is about the fundamentals of supply and demand. And we measure demand in the form of household formation. We think that's the most relevant metric to measure demand in the multifamily rental space. And we anticipated a decline because of the current administration's position as it relates to immigration. If you look back over the last 10 years, new household formation in this country averaged about 1.26%. If you look back at 24 and 25, you're going to see a downward trend to last year's new household formation at just under 80 basis points or 0.79%. Important to note, the country is still growing from a household formation perspective, despite many headlines and many challenges as it relates to immigration. We are optimistic that as a country, I think we need immigration. Not a political point, but expect at some point we will see at least some reversion to that and potentially even an uptick. But if you consider a country with 135 million households growing at, call it 70 basis points a year, our country still needs 950,000 new households each year. And I'm rounding slightly there. And historical data would suggest 2/3 of that will go into single family and 1/3 will go into multifamily. It's our position that the unaffordability of single family may result in more demand going into multifamily housing. So I know we're just at our core message here and we're talking about the current topics. We'll dig deeper into the supply and the demand fundamentals. But looking back at a year in 2025 to see household formation growth, despite the challenges of immigration, be at 80 basis points, I think that's really positive and speaks to societal trends that are generating more demand for households in this country.
No, that's encouraging. At the bottom line is demand solid, supply slowing. That bodes for a good future. That's it. The impact of AI in our space. What are you seeing there?
AI is one of the most common questions for any firm of any business right now. How will AI impact your business? Is a common question we get, and we're going to focus today on how it's going to impact our investors' position in the funds that we raise capital and what we deploy. And anytime over the last number of decades, you would have bet against the American economy to bounce back from technological innovations, it would have been a bad bet. Our country has gone through some pretty dramatic technological innovations, wars, crises like COVID, et cetera.
Outsourcing jobs around the country.
Offshoring around the world. And the innovation of our country has absolutely stood the test of time. It's hard to envision what new jobs AI will create. But if I could take you back 30 years, Tim, and I would have told you that there are going to be influencers on social media that are making very significant money early in their career, and they're going to be pursuing that career versus accounting and finance for the economic opportunity, you would not have believed me.
Why would we know what it
Was. And no one would have known what social media was, internet, et cetera. And tremendous economic engine that created. Now, AI is a very real threat to have negative consequences on employment in this country, and specifically called white-collar, high-paying job employments. AI provides scale to incredible brain power, and it's never been easier, albeit artificial brain power, but that scale will have a real impact on the economy. There will be a transition period, I suspect, and there are many headlines today about very large tech companies in particular with a vision to reduce their employment base because of AI. So let's keep that context. We're monitoring it. We're watching it. We need households. We need employers, et cetera, to grow, to demand the housing that we provide our country. So while being aware of that, I think it's going to be more of a transition period. And if you would look back at past technological advances in our country over the long term, you would see more gains as it relates to employment, et cetera. Will it be different this time? I think it's a great question. I think we provided some optimism that there may be more.
Yeah, there's dynamic wins in our favor from the housing perspective. Lots of demand generators, people living longer, all that kind of good stuff. So there's a lot of demand generators there that will, I think, offset some of the impacts maybe from immigration or AI. But the wins that are back from a demand perspective, I think overall.
I want to focus on what AI will not impact. There are incredible ways in the marketplace today, if you're bullish on AI, to express that investment thesis. AI will not replace a roof. It will not replace a bedroom. It will not replace a kitchen. And it's also not going to replace, certainly in the short term, the labor that's required to build those housing units.
And people have to live somewhere, right?
People have to live somewhere is a key message. And AI will be an incredible productivity tool in our economy, in our country. That's very exciting. But at the end of the day, I'd bet the habit of people laying down under a roof will continue for the foreseeable future, and we can take advantage of that.
You could even
Multifamily investments.
You could even argue there'll be more demand for multifamily versus single family because of that issue.
Absolutely.
Yeah.
If the employment piece plays out against us, if it materially reduces jobs in our country, that may create more demand for multifamily housing and ultimately be a tailwind. I would share that that's an optimist viewpoint, could certainly have a negative impact on housing prices. But another very real impact for our investors that needs to be considered is very real operational efficiencies across our portfolio can be gained using AI and using AI.
Like expense reduction?
Exactly. Okay, so not picking on payroll, but to just give you some context as it relates to our portfolio. If you look over the last 12 months, the average payroll per property was just under $1,500 per unit per year. Let's say in the next 3 to 5 years, and it would be maybe a combination of payroll, maybe a combination of general and administrative related costs as it relates to our property, marketing, et cetera. Let's say we just have $500 per unit per year in savings because of the productivity that's allowed for by AI. At a 6% cap rate, our portfolio today, property values would increase in the range of 5% and equity values would be up 10 to 12%. No rent growth, simple productivity increases. So it's pretty dramatic, the effect it could have on our portfolio. We're working hard. I think some initiatives we're already doing as it relates to AI that are going to bring value and are already bringing value to our properties and our investors. We're validating vendor invoices and tenant applications using AI today. One of the challenges we've had in the past couple of years in particular has been fraudulent applications. We use an AI-based tool to better vet fake applications in the marketplace to ensure we have better collections.
Yeah, but we're also screening invoices, right?
Yes.
And then our AI product, books the accounting entry, puts it to the right property, gets the payable set up. There's lots of productivity gains to be had.
And that doesn't hit on the leasing side where we're probably seeing the biggest impact on our portfolio today. We are using AI as a tool when tenants reach out to a property. They might do it by showing up in person, calling, emailing, or texting. The last three, there's a way to engage AI to ensure that that phone call is picked up every time, that that text or email is responded to within 5 minutes every time. We can give our team the ability to respond, our on-site leasing teams the ability to respond. But if they're away, touring a unit, et cetera, the AI will intervene and engage with that prospective tenant, look to book a tour so we can drive occupancy and rent growth across our portfolio. We're trying out 2 different products right now across our portfolio. The same technology is also being used to help with our collections and to manage our tenant maintenance needs as well. So critical innovations that are equipping our on-site teams to be able to better do their job. A new technology that we're trying is a technology that enables prospective tenants to tour units without the leasing folks to be able to be there. Think how many times you might want to go tour a unit on a night or a weekend when you're in town, maybe moving to a new market. There's technology today that allows for self-guided tours of those properties, safe access to those properties, making sure that the people entering the space, have valid driver's license, et cetera. So we know who would be entering the building for that period of time. And it can really enhance what our on-site leasing teams can do. So these are just some of the early examples of the gains AI will drive to our portfolio. The impact of this to our investors will be significant in the form of potentially higher occupancy, higher rent growth, and reduced expenses as well to ultimately drive value.